Mr. Mistry, thanks for joining in and taking the time out. What did you make of this? Not dovish seems to be a consensus.
I think completely along expected lines that given the global economic uncertainty, the trade wars going on and all of that, the stance remains unchanged, and a 0.25% reduction in interest rates will help, hopefully help boost growth further. That coupled with the fact that existing home loan customers will get the benefit of the 25 basis points cut in rates, particularly, obviously customers who are linked to the repo rate, which is the bulk of the customers. So all in all, as expected, good policy. The stance continues unchanged, and I think we will now start seeing the growth pick up in the system.
Mr. Mistry, hi, Tamanna here. In terms of the outlook we saw from the governor, and I'm asking you this because the 25 basis point rate cut was widely expected, priced in by the market and everyone who watches this event very closely. But on the outlook of whether we will see another 25 or another 50 basis point this calendar year, what sense did you get from what Governor Malhotra was saying? And of course, his first speech was being watched very, very closely.
I think the governor said that growth is picking up in the system. He also said that the outlook on inflation is neutral. I don't think he seemed to be very worried about inflation. And if we had good monsoons next year, then I think you would see 2 more rate cuts of 25 bps each. If you don't see good monsoons, my expectation is about 25. So anything between 50 and 75 for the year would be my expectation, depending on data, depending on how things work out.
Are you in agreement with the growth outlook? Just before we came to you, sir, Aditi Nair was giving her view that she thinks that the growth outlook is a little on the optimistic side. Are you seeing yourself signs that there would be this kind of a recovery in growth?
I think there will be a recovery. I personally think, and I may be differing from the earlier view, I think you may see even a pickup in growth beyond the 6.7% that RBI talked about for next year. You could see 6.7 probably getting closer to 6.8, or if you are lucky, maybe a little more than that. Obviously, depending upon good monsoons and the macroeconomic environment in the rest of the world not getting completely beaten down.
Mistry, would you have, considering that March is around the corner and liquidity conditions, though RBI has done enough measures, but would you have hoped for some more measures around liquidity specifically to be announced, or can they be done beyond the policy as well?
We've seen that liquidity measures are always usually announced beyond the policy. The only liquidity measure really announced in the policy is a cut in the CRR rate. We saw a cut in the CRR rate in the last policy. And therefore, I don't think one would have expected a CRR cut this time. But you saw that a couple of weeks ago, not even a couple of weeks ago, about 8-10 days ago, RBI, through these OMO operations, has injected or will be injecting a lot of liquidity into the system. This quarter also important because this is the 4th quarter and you will see the largest installment of advance tax being paid in the current quarter.
Got it. Mr. Mistry, just one last question from mine. In the 2 instances that you spoke about your constructive opinion on growth, you mentioned domestic factors completely. Could global growth worries bring a question mark to even the RBI's estimate? Forget your assessment that it could be higher as well.
Look, I think globally, we are living in a world of complete uncertainty. No one knows what's going to happen 3 months, 4 months from now. We've never seen this kind of global uncertainty any time in the near future.
Right.
So global factors will affect our growth all over the world. India will be least affected. I repeat, least affected compared to any other big country, simply because our domestic economy is very strong. And the measures taken in the budget in terms of leaving money in the hands of people will push consumption. If consumption picks up, local consumption picks up, then that itself will create need for more capacity, more products being produced, and therefore more investment. So whilst there will be an effect, I still think that despite the global environment, we should still be looking at a growth maybe marginally higher than what RBI has said. Unless there is a very major global catastrophe, which we can't predict, or oil prices shoot up beyond what we are expecting.
Just one last point, Mr. Mistry. Are you expecting a fair enough pass-through of this rate cut? Because that always becomes the question.
I would think so. I mean, the rates, the repo rate, most of the loans are now linked to repo rate, particularly the housing loans. So there it is absolutely automatic.